Supermicro Computer has the best stock returns in 2024, and it's about to be added to the NASDAQ 100 index on July 22nd. Does that mean it's a good stock to buy now? Welcome to Global Value. In today's video, we're performing a fundamental analysis of Supermicro using Warren Buffett's investing framework. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what Supermicro is worth in today's stock market. Plus, I'll share a special bonus that could be the deciding safety factor when adding Supermicro Computer stock to your portfolio. Right now, Supermicro trades for $816.64 per share. In its last day of trading alone, it's down 6.88%. This comes on news that semiconductor sales may be restricted to China. Even though they were down recently, since July of 2023, Supermicro is the top performing stock in the market. Their stock is up 182%, which absolutely crushes the S&P 500, which is up 25% over this time. In the last 5 years, they're perhaps the top performing stock, delivering a 119.2% compounded annual growth rate. In the last 10 years, they've compounded at 43%, again just crushing the market, especially in the last couple of years. When we go back to the global financial crisis and they were listed, they've compounded at 29% annually. The S&P 500 here looks like a flat line compared to how they performed. Even with crazy performance, Supermicro is down $400 from their 52-week and all-time highs. Still though, the company trades more than 4 times its 52-week lows. This is a highly valued company, but it's not as big as other AI stocks. Today it has a $51 billion market cap. What's amazing about Supermicro Computer is that no super investors own it today. In fact, Howard Marks was the last investor with the position in the company, which he sold out of in the third quarter of 2022. Starting with our first metric, we want Supermicro's average returns on capital to be greater than 14%. These returns tell us how much value the company creates. You can think of it like weightlifting form. You want great form before you start adding more plates in the gym. For Supermicro, they earned just slightly above average returns from 2019 until 2021. Then amid supply constraints in their industry, their returns have really shot through the roof. They earned 16.5% returns in 2022 and 33% returns in 2023. That's not out of the ordinary for semiconductors, which are a cyclical industry. They can earn very high returns during supply constraints, but then this can reverse and things can unravel. Still, Supermicro earns 15.6% returns in an average year over this time. That's just above the benchmark we wanted, meaning it's a check on our first metric. Now, what does the company really do? Supermicro Computer provides high-performance server technology services to cloud computing, data center, big data, high-performance computing, and Internet of Things embedded markets. Its solutions include server, storage, and workstations to full racks, networking devices, and server management software. The company operates through one segment that develops and provides high-performance server solutions based on an innovative modular and open standard architecture. More than half the firm's sales are generated in the United States, with the rest coming from around the globe. Now let's look at those sales where we want sales, earnings, and free cash flow growth in our second metric. In the last 5 years, Supermicro's sales have tripled. At the same time, their earnings are up more than 14x. But the big problem here comes from their free cash flows. These have been extremely lumpy and they're different from their earnings, potentially creating concerns. At first glance, their cash flows grew from 2019 until 2023. However, in 2024, their free cash flows are down. This decline in their cash flows comes from a $2.6 billion write-off in their inventories. That's bad to see with such high demand in cloud computing. It means the company may face a reality check sooner than later. Due to this, their free cash flows are actually negative in their last 12 months, and it's an X on our second metric. Next, we want to look at the company like an individual shareholder. Here we want earnings per share growth. We learned their earnings have grown by 14 times, yet the company has also diluted shareholders by 13%. This shareholder dilution isn't ideal, especially as it hasn't come at the best prices for the company. They've raised money, but not as much as you would have liked, and they've diluted existing shareholders. Yet this isn't out of the ordinary for fast-growing tech companies. Their earnings per share are still up over this time, and they brought in $18 worth in 2024. It's a check on metric number 3. Metric 4 is similar but even more important. We want free cash flow per share growth. So far, we've addressed issues with their cash flows and noted they're negative in 2024. Because of this, their free cash flows per share are down and they've continued to dilute shareholders. It's not great that their cash flows especially have been lumpy here and they're negative in 2020, 2022, and 2024. This is an X on metric number 4, and so far Supermicro Computer is split through 4 metrics. They have 2 checks and 2 X's. Now, why don't we look at the company's balance sheet to see if it's safe? In recessions, it's companies with too much debt that can have the biggest losses and even go broke. We don't want that to be the case for Supermicro, and thankfully for shareholders, they don't look like they're in that position. The company's had net cash in 4 of the last 5 years, and they have a net cash position today. They're sitting on a $215 million cash pile. Meanwhile, when we add their cash flows up, they're actually positive in the last 5 years. These come out to $369 million worth. On average, they're on solid footing, but you don't want to see their current cash burn continue. It is, however, a check on metric number 5. Now, before we learn how much Supermicro is worth, why don't we check in on our safety bonus? The father of value investing and Warren Buffett's teacher, Ben Graham, wanted to see a current ratio greater than 1.5 times. It's a key measure of short-term liquidity for how a company's current assets can meet their current liabilities. For Supermicro, they're above this ratio in each of the last 5 years. Even better for shareholders, they're sitting at a 4.7% current ratio in 2024. That's more than double where they ended 2023. This means they're on solid financial footing in the short term, and hopefully they continue this in the long term as well. It's a nice check on our safety bonus. Now, what are they worth? The big metric of them all, metric number 6, is also today's first valuation. We want Supermicro's average cash flows divided by their enterprise value to give us a yield greater than 5%. This would match the historic yield from the S&P 500 and give us a risk premium to the 10-year treasury. Today they have a $51 billion enterprise value. That's the number we get when we add their market cap and their net debt together, which helps us look at the company more like a private business. In an average year over this time, Supermicro brings in $74 million. These have been lumpy and they haven't been at that number in any of these years. Instead, they've swung from being fairly positive to being pretty negative. Still, when we divide those cash flows by their enterprise value, today it gives us a 1.45% average yield. That's lower than our benchmark, and again, they also have a negative current yield. Because of it, it's an X on metric number 6. Don't just throw the business out, we still have 2 more valuations you'll want to watch before you stay till the final fair value at the end of the video. Next, let's give Supermicro credit for its growth. Here we'll use a DCF analysis to take an average of their cash flows and grow them into the future. Currently, they have negative cash flows, so instead we're using one of the loosest financial metrics, EBITDA, to show really how inflated the numbers are. Let's assume these grow at 14.7% in each year in the next decade. Then in the following decade, we'll assume this growth is cut in half and they still grow at 7%. On top of that, we're going to add in their tangible book value to give them credit for their net worth. Then if we want a market-beating 15% rate of return, which is the same return Warren Buffett looks for in his investments, according to a DCF valuation, Supermicro Computer today is worth $221 per share. That's less than a quarter of their current stock price, much closer to their 52-week lows. Please keep in mind that they've been somewhat predictable in their past, but right now there's huge demand and constrained supply in certain sectors in the semiconductor market. We can see how those cycles have played out in their numbers in the last decade. What makes you think this would be any different? This is why our third valuation, which uses past multiples and their future assumptions, only comes in at $181 per share today. We can see Supermicro's having its time in the sun due to their hockey stick-shaped stock chart. Now let's put everything together for Supermicro. In our review, we learned the company goes 3 for 6 on the Select 6 analysis. They've had good times recently in their industry, and they've seen higher returns in their last 5 years. This comes at the same time their sales have tripled and they're seeing record profits. The company also has diluted shareholders during their run-up. Still, they produce positive cash flows, they have a cash cushion, and they look good on a current basis. Still, their valuations don't look aligned to their cash flow potential, and these are negative in their last 12 months. Remember, this isn't financial advice. While they've been the top performer in the last year and crushed it in the last few, it looks like things may come back down to earth for Supermicro. This is why when we look at our investing tools, today their fair value only comes in at $163 per share. Incredibly, this company last traded there just in 2023. It really shows you how much they've spiked in just a couple of years. Supermicro looks overvalued. If you want to find stocks that are undervalued, sign up for our investing tools and get exclusive bonus coverage of 102 stocks and counting.